This is why I'm concerned about uranium. I think uranium is seen as the power play of choice, but I would caution people on uranium because I was told by people in the business, if the price goes high enough, there's plenty of it around. It's not rare, it's not scarce. It's rather like coal. There's masses of coal. The fastest thing, if you want more power in a hurry, it's coal.
Hey, trader friends, welcome to the show with myself and Julian Wheeler. Shark Capital, good to see you.
Very much.
I'm taking a look at the commodities space because I know that there's all this noise. It's often said in the markets, and I don't know whether you agree with this, that when there's a load of news, so hype around, the front pages of websites, newspapers, and also people like Ray Dalio saying, oh, what did he say recently? Buy gold now.
Buy gold now. That's a bit late, Ray.
A bit late.
I mean, I'm assuming he's had it for a while. He's not going to be buying it as he tells the world to buy it. So he's probably had it for some time.
Selling, maybe?
I think if we see a filing in the next quarter that he's been selling, he'd be in a bit of... wouldn't look good, would it?
And front page of the FT this week as well?
Yeah.
Gold shines.
I did see that, and he said be 15% in gold. Well, I can tell you in our shard model portfolios, we had 15% of gold about 4 years ago. Now I think it's down to about, I was trying to check this morning, but I think we're down to about 8.
Right.
We still have gold. So, I think there's much better than that.
Yes, I think the whole gold thing, the sheen, it's all kind of past. If you want to look at the next few months, I've crunched up some data for you.
Yeah, we go.
To give you a good comparison. As you guys know, I've been talking a huge amount about hi-ho silver. And of course, a strong contender, you hear me talk about this all the time. Once gold has had its run, silver and platinum tend to follow. And platinum is looking very attractive right now. Performance comparison, looking down my chart here. This is the 1 month and looking at the 3 month as well. The light blue is the platinum there. 3 month is the silver. So platinum leads as the best 1 month performer, but in terms of all-round 3 month performer, silver is a good contender. I looked at technicals and fundamentals are looking ahead, and I think platinum.
Well, funnily enough, I was going to come and when you asked me, are we going to talk about gold? If everyone's in gold, be careful. Because, if you ask people why they're buying gold, oh, it's an inflation hedge. Right. Well, actually, that doesn't correlate very well. So that's a bad reason to buy gold. It's a safe haven. Fine. Your safe haven means you're happy for it to go nowhere. I don't believe that. People are buying gold to make money.
They are, but also the other thing is we had Simon Popple on, and one of the questions I often ask is, lots of people have said, and I've not been in it, not in the last 2 years, not in the last year. Have I missed the boat? And I would say, wait, there are these, if you still feel the need, the urge, shall we put it, there are obviously those miners out there, right? With confirmed solid deposits.
Yeah. The trouble with miners is they are, if you like, their own worst enemy. What I mean by that is at the time that things are up, they start expanding capex. So they rush to the market, bring on new mines, bring on new production just before the thing falls, and they always end up oversupplying. They also have costs, they have power shortages. As power goes up in price, you're in South Africa mining.
Yes.
Power prices are through the roof.
Yes,
so
they are.
You don't make very much. I'd rather stick with the physical commodity. And by the way, every time a miner fails to produce his quota or has a poor yield and ore deposit, bang, it's great for the underlying commodity. Yeah. But I think you're right with platinum. I'll give you a couple of facts about that.
Yes, go for it. I happen to be wearing a platinum ring.
Okay. So if I said to you how much gold is there ever been mined in history? Do you know the answer? Any idea?
No, I don't.
6.3 billion ounces. 6.3 billion ounces is all the gold ever mined in history, roughly. Platinum, how much? 320 million.
Oh, wow.
A 20th.
Wow. I would have gone with half.
Okay. The answer is it's far more rare. What's more, coming to market, you talk about the miners. There's 100 million ounces mined of gold every year, only 6 of platinum. So, traditionally, platinum was worth more than gold. Why? Because it's far more rare. There's far less of it. So if you're just talking about an asset, you want something that's in smallest supply, surely. Then we had all the catalytic converter chaos with the diesel engines, the whole Volkswagen scandal, all that.
And catalytic converters were being stolen off.
All of that because it was worth so much. Now we don't have diesel cars. People say, oh, we don't need platinum. So platinum has had virtually a decade in the wilderness, right? It is 10 years ago today, because I looked it up, gold and platinum were about the same price.
Wow.
They're about $1,100 an ounce versus 1,000.
I do have a position, a sizable one in silver though, because I still think that there is a silver squeeze potential. Inventories depleted over there. Also, huge industrial demand growth.
In semiconductors.
Right? But you're right, there is a huge deficit in platinum. In relation to gold, I have to ask this question because everyone is really still, this is what makes a market. Some of those who are, still holding on to tech, saying yes. I know you say that, April we had that correction, so there's not going to be this, correction sizable coming up. But then I've also spoken to a lot of analysts in New York, and half of them right down the middle still saying, there's going to be this correction coming. It's going to be anytime soon, imminent. Of course, they have been saying this for some time now.
Right. Okay.
So those of them are still in tech saying, how do I hedge this? What do I do? I want to put that to you because it's always great having a different voice.
Okay, so tech, I think we have to start to get away from you talking about a correction in the market as a whole, the tech sector, equities overall, whatever. And my feeling, why I've been consistent with this, we're not getting the market correction, is because nobody's in it. It's a hated rally. The only people in this are retail. And it's rather like...
It's a hated rally.
It's a hated rally by the funds, the institutions. I mean, when people say, oh, it's a bubble, what does that really mean? It means, well, they're not in it making money.
Yes, exactly.
Right? Nobody who's in it is saying this is a bubble. They say, no, I'm very clever. I'm making money. It's going up. Yeah, it's not a problem. Right? So what you've got here is, as I mentioned to you before, I said retail is small, nimble, can get out. So they can keep dancing while the music's playing. To quote Chuck Prince from back in 2007. He was the CEO of Citigroup back then, just before the crash. And he said, they said, aren't you worried about the market? And he said, well, yeah, but the music's still playing. I have to keep dancing. And that's his famous quote just before the crash. And that's the fact. While the market goes up, people have to invest. That's what they're paid to do. So they are not in it. And until they all get in, and so I look for things like sentiment indicators. While everyone's still bearish, market doesn't top. While everyone's still underhedged, they're actually saying one thing but doing another. Right? There's no panic out there. The other thing is markets don't crash from highs. We go down for a bit. In April, when we had the collapse, the market had actually been going down since February. So you will actually get a bit of warning. Unless something happens like Rumsfeld used to call the unknown unknown.
Oh, yes.
Remember his unknown unknowns? No knowns. So he's unknown. Look, an unknown unknown is one that we can't discuss because I have no idea what it is. Right? Nor do you, nor does anybody. So that's different. But apart from that, you will have plenty of warning. Obviously, we're going into earnings season, and that will give us a bit of a clue. But apart from tech, a lot of the market's already corrected. It's come down quite a bit. Certainly in the consumer space, there's a feeling that the economy is slowing down, which is why the Fed are cutting rates. But the fact is, there is a weight of money that's not in the market, and they would love it to come down to buy it. You're going to need to have 3 or 4 dips that, if you like, get bought and fail before people start to give up. So I think you've got plenty of time before we have any correction of size.
I agree. I mean, look at the VIX as well. Just putting a chart there.
Right.
Look at how this is the daily chart. It is just,
Right. Now wind back to that bit in the beginning there, right? There's the collapse, right? There's your April collapse. But look at the little warning we got with that first move in January, February, that hump. You see, you got that bit first. There was a breakout to the VIX, then it pulled back, then it sold off. Show me one of those again before I get worried about the market.
Speaking of the market as well, taking a look at uranium. Uranium, one of the ones that I keep a close eye on because the spot junior uranium miners, this is not trading advice, I'm going to remind you again, but it has had a really, really good run. There are still signs that we are seeing this squeeze in the uranium market. My theory here, and please poke holes in my theory. I like it when people do because it means there might be something I have missed. Two heads better than one, is that we are going to need this huge baseload. And the fact that, we're no longer a single mobile phone user. We're double, aren't we? Everyone at home, I certainly do. I've got about 5 screens,
It's the fact that the amount of power,
laptops.
It's the amount of power you're drawing.
Yes.
That's what's more critical.
Exactly.
It's not so much the device itself, but every time you do one of these Gemini queries or ChatGPT, you are burning a lot of electricity. And this is why I'm concerned about uranium. I think uranium is seen as the power play of choice. But I would caution people on uranium because I was told by people in the business a long time ago, by the way, if the price goes high enough, there's plenty of it around. There's no shortage of uranium.
Of the yellow cake stuff.
Yellow cake stuff. It's masses of it. It's not rare. It's not scarce. It's rather like coal. There's masses of coal.
You like coal, don't you?
Well, I like coal because that's about as contrarian as it gets. And I'll tell you why. It's very simple. Trump. Trump is the man who says, stupid, ugly windmills. That's his quote, right? And he tried to shut down Ørsted's wind farm, which the Supreme Court or one of the courts has overturned and allowed it back on again. He is all for, what do we have in America? A lot of blue states. Places like Pennsylvania, what do they make? They've got a lot of coal. They've got a lot of coal. And Trump is not an environmentalist. He's not. He has always said, by us not using coal, we give China an advantage because, hey, they use coal. And by the way, emissions don't just sit over one country, by the way. So there's not much point in you turning off your coal if your neighbor's burning it. There's no difference. So I think if we have a power crunch, which California is the first to show this, they're actually talking about it, uranium, back to you, it takes too long to get there. For all the nuclear plants you want to bring on, we're not going to have that power for 5 to 10 years. What are you going to do? I want this AI. I want to use ChatGPT tomorrow, today.
You can't just flick it on.
No, the fastest thing you can get, the fastest thing, if you want more power in a hurry, it's coal. So I think he might do a funny, I'm going to have a moratorium. Well, he's never been anti-coal, right? Never anti-coal at all, or natural gas. So I think, and coal's on it, nobody wants coal. So I think that could be a bit of a contrarian buy. I'm
going to check that actually.
Well, it's actually not that contrarian because Peabody, which is the largest play, BTU, is a good ticker. BTU has actually done very well, which also tells me something.
So Trump has said something about coal.
What has he said about coal?
He has signed this executive order earlier this year because I seem to recall him saying something quite Trumpian. And here it is. Beautiful, clean coal.
Clean coal, there we go. So actually, yes.
Tell that to the people of India.
Clean coal where you can have the scrubbers and things like that.
Yes,
there are various ways to play it other than just the coal. The railways transport it, for example, and they haven't been great. CSX transports a lot. That's one of the mergers. I think that's probably going to come out of this pretty well. Norfolk Southern, they all, there's quite a number of subtle ways to play coal.
Jugger saying global energy production of renewables just started to be higher than from coal, just saying.
Well, he's right. But when we need the amount of power we have, and when you see what's happened to the price of electricity in the States, it's, I had a stat, this big announcement the other day, this OpenAI deal with, it's the AMD one of these huge deals. They want 6 gigawatts of power.
Yes.
You want that 6 gigawatts of power? That's Singapore's load.
Yeah.
That's Singapore.
Yeah.
So that's one deal of American companies, the equivalent of Singapore's power demand for a whole country. So, I mean, you're not going to do it with renewables. No. You're not going to do it with renewables.
You need a base load.
You've got to have a base load. Renewables, it doesn't blow, it doesn't sun,
Which is why my uranium play is a 10-year.
It's a long-term play.
It's a long-term. It's not a short-term one, people. And just very quickly as well, just showing my age now, I am truly actually 85 years old. There was a person, I remember this because I was working and living in Australia at that time, that came into their parliament with a lump of coal. Do you remember that?
Yeah, vaguely.
Yes.
Go on.
But it is similar to to the mood music that is coming out of the US at the moment.
Well, there we go. There's Jugger saying it's 34.3 versus 33.1. Well, that's okay. I can deal with 33.1. I'm still a third of global power, right? But my price of my stock doesn't reflect that.
So just very quickly, if one is interested and thought, oh, I really like this, coal, and I want to get in on it, what was the best way?
BTU. I mean, Peabody is the largest. I mean, there used to be something called Arch Resources, but I think that got taken private, or it merged with something. Most of them have gone for the very simple reason that most of them went out of business. So Peabody is really it's like an ETF in one stock.
Interesting. Well, we are going to have Rich in to grill Julian next, so stay right there. Give us all your questions in the chat. Slam the like and subscribe button. We'll be right back.
Now, a stock dear to both our hearts, Nike.
Oh, yes.
When those numbers first came out, as you predicted, the stock shot higher, 4 or 5%. They were a solid set of numbers in the US. China was a bit disappointing, to be expected. Was there enough there in the running segment? The running segment really positive. Was there enough there to cause us to look at the way the stock sold off and have some hope?
Yeah, I mean, so as you said, I suggested that the thing was turning around. Management come in. What's really key is that they've completely changed the way they organize the company. So rather than having everything in men's, women's sort of fashion, they say, right, we're doing it by sport. And so they turn their attention first to running because that's their key category. And they brought out a new product. They sort of retired the Jordans, and they've had and why I think there's hope is because the current numbers have still got the headwind of inventory markdowns, getting out the old stock. We've only just now finished doing that. So the inventory is now finally under control. That means the margins are probably at their bottom and worst. And they did a plus 20% number. That's big. That is big. And I did my own market research, as I told Anne John, and it's the top selling shoe in the store I went into in London. So you now have the next 3 quarters to comp against the previous ones.
Yeah.
So we've got easy comps for the next 9 months, up to a World Cup for the football, right, next summer. So you've got that ahead. The market must have sold off because it's selling off all consumer stocks because it's really worried about the overall macro. So I think the way I'm looking at it is there are going to be winners and losers. And I'm putting Nike in the winner camp, and I've got others who I've got in the loser camp. So for people we've got certain clients who'll do long short. So we've got some shorts on as well. So
and do tell us what would they be? Because we've shown the way that Nike has sold off again, and it's exactly where it was before it announced those numbers.
69 or something. Yep.
We had the numbers, they came back, and then Elliot does give a good conference call.
He does.
I always feel bad for Matthew Friend because he has to kind of do the shit part, and give the guidance. I must admit, when I heard the guidance, I thought, right, this is easy because there's no way this stock's going above 80. In the short term, we've got another 3 months where this stock is absolutely limited on the upside unless there's new news. But with the margin headwinds they're facing, with the tariffs they're facing.
Well, the tariff, we know what they are, right? So that's in the number.
Well, we do now.
Yeah, we do now because they are mainly in Vietnam.
Yeah.
Vietnam has got this 20%. China's still a wild card. But to me, they are better offset to handle this, given their size, than some of their smaller competitors. And I think they will struggle more. And so those are the places that I feel that.
Right. So what are your favorite shorts?
Well, the shorts my favorite short is Lululemon.
Of course.
Because Lulu has been, shall we say, economical with the truth. And again, I went through this what I mean by that is, turns out 2/3 of their sales were coming into the States in onesie twosie packages, i.e. under the de minimis tax loophole. Yeah. Well, that's gone. That's gone. So they are looking at a 250, 300 basis point margin hit. And they have got to now anniversary that. Now, the only thing people are going to say to Lulu is, well, look, it's cheap. I don't like that. I don't buy a stock because it's cheap. Because I see no turnaround for that. And Nike's after them.
Yeah.
Their new Kardashian Nike Skims.
Yeah.
Yeah. Which has come off to very good reviews that I've seen. And that is priced at about a 30% discount.
Well, that's what I was going to ask, because I go into Lulu and I feel the quality, and it is good, right? And I'm not talking about women's lycra. I'm talking about the men's section.
Yeah, whatever you say.
But I did pay 110 for a pair of jogging pants, but I won't pay that again for another 3 years.
Okay.
And I just don't see the ladies yoga users and also men's sport that you don't need that stuff if you're going into a weaker economy. If the banks stop printing and paying bonuses, then...
And look, if we have a consumer slowdown, which is what, if you like, the Nike sell back to where we are is saying, then there's no way, I don't see how Lulu gets away with it anymore, especially as instead you can buy from Nike at about $60. So it's about a third less.
Yeah.
And these things, and everybody likes to try something new. So if they try this out, then Gap have got one too called Athleta. That's another place. Basically, Lululemon had the market to themselves, and now they don't.
Right.
It's as simple as that.
Okay.
So the only thing you say, oh, well, look at 160, 170 or whatever it is, it's only on 12, 13 times. I go, yeah, until that 13 you find that's 18 times because they missed the next couple of quarters.
Okay. Right. Anything closer correlated with the actual running shoe, though?
Well, the other ones, you've got Deckers, who've done well. The thing is, their stock has been smashed as well.
Yeah.
So, the problem is I think that Deckers, the problems they've got, they're also at risk. There's no question. They are, and they're probably, that's probably a closer comp. They're probably going to lose out. Or if Nike is coming back, they are a net loser.
Yes.
You've got also VFC.
Okay.
That's smaller. The smaller you are, I reckon, the more at risk you are.
Right.
From a just a balance sheet and.
What shoes VFC? Sorry.
VFC has Converse and Vans and.
Like the distribution.
Yeah, they're the. You've got they're some of the old. The VFC ones are. I'm trying to remember all the brands. They've got a whole load of, if you like, what I call second line brands.
Okay.
But of which Converse is the main, I think.
Yeah, and that's one of.
They're also. You see, they're going to have the same tariff problem, and they've got less of a balance sheet and less of a economy of scale on which to handle that.
Yeah. Okay. Right, moving on to another end. What about Netflix?
Okay. So Netflix. is always one of the early reporters, and it's been coming off recently. So it's quite, if you're going to buy something that's nice that hasn't done anything. Stock is now about under 1,200, about 1180, something like that.
Yeah.
Something like that, and it peaked at about 1380. So it's a good 215%, 10 to 12% below its high. The reason it's been weak recently is for something I think the market's got wrong. The market is worried that they are going to bid for Warner Brothers. I think. I've heard that.
Yeah.
I thought that's not possible, surely. And I actually spoke to a couple of analysts and I said, promise me Netflix isn't going to buy Warner Brothers. He said, I can't quite promise you, but I think it's highly unlikely.
Yeah.
He said, they'd be more likely to ever run at Disney, frankly. And I said, whoa, that would be something. Now, that's really
back
would be
about
something.
7 years.
That would be something. Now, there's no way they'd buy the whole of Disney. Disney would be broken up. But I don't think they'd be allowed to, is the serious. I don't think the number one streamer can buy the number two streamer. I don't think they'd be allowed to do that. But, really, no, I don't believe that. The point is, the market's been saying Netflix could be in the bid. So people have been going, oh, we don't like that. So I think it's been selling down. What you're going to see from these numbers is continued more from Netflix, but the new bit is going to be the advertising starting to kick in. It's taken a while. I know we've talked about it. Obviously, they've lapped password sharing crackdown. So that little bonus has probably been had, but the advertising can start to kick in. And the reason I say that is if you look in the weeds, you just signed a major partnership with Anheuser-Busch. Now, Anheuser-Busch, Budweiser, if you want to think of it, the main brand, has never advertised on Netflix before.
Right.
They are about as classic TV ad as you get.
Yeah.
So suddenly they're going to do stuff with Netflix. They will sponsor their live NFL games that they've got coming at Christmas, possibly some of the big events they've got.
Wow.
So something's going on. And to my mind, if they persuaded Budweiser to come on to Netflix, they must have got something right. Because, you know, the marketing team at Anheuser-Busch, I would say, can be matched by Coca-Cola maybe, but not many others. They know about global. And what is Netflix? Netflix is global TV.
Absolutely.
Basically.
It's the go-to. If you lose your job, you're not cancelling your £13 a month Netflix.
I mean, when you talk about value for money, I defy. Oh, by the way, you can always drop down to the ad tier. I'm far too cheap to spend what you do on 13. I have ads, which is how I know about the advertising. I actually do it so I can see the ads. Right. And the ads are, you go, oh, we've got an advert. I mean, they only come up so infrequently, which means there's masses of room to ad load. Whereas you watch Channel 4 or ITV, it's almost unbearable.
Oh yeah, it really, ITV especially, yeah.
It really is.
For the content and for the adverts.
Well,
Julian, thank you very much. That's us run out of time, unfortunately, today, but yeah, very keen to talk on more stocks next time you're on.
Thank you very much.